Payment plans in Dubai have been gaining popularity as an alternative to the traditional mortgage systems, and it's easy to see why. The idea of being able to own a home without taking a massive loan is appealing to many, and Dubai's real estate market has responded to that with many attractive options that cater to different buyers. Let's take a practical approach and discuss the advantages and disadvantages of both in order to understand how each of those work and hopefully help you assess which option fits you best. But before that, please drop a thumbs up and subscribe to my channel to see more of these videos in the future. This helps a ton, so let's begin with the analysis. As Dubai's payment plans offer a range of benefits that will definitely make it more attractive than the traditional mortgage. For one, they often require lower down payments, so the cost of getting into that investment will be lower, which will make it easier for the buyers to make that investment. They also often offer tailored repayment plans that cater to every single buyer in individual, and it makes it more convenient for the buyers to discuss this with the developer in advance than getting something fixed and for a longer term with also interest. This means that the buyers can adapt their payment terms to suit their changing financial needs in any case of that happening without really worrying about strict repayment terms. And let's not forget about the lack of the interest on those payment plans, which basically saves a ton of dirhams for the life of that property. Another well-known benefit of the Dubai's payment plans is that they often are more simple and have a very easy approval process. And that's at least compared to the traditional mortgages, where we'll discuss in a second how many things you need to secure before getting approved. This means that the buyers can get approved quicker and easier without having the hassle to work with the piles of paperwork or very lengthy waits. And finally, Dubai's payment plans often come with a various range of benefits, such as exclusive discounts and reward systems, which can add significant value to the property. One example of a good payment plan comes from the Reef developers. You can secure a unit with just 20% down payment, and after that you'll pay just 5% every 3 months or so, spread out until completion. The final 40% is due upon completion, which is set for March 2027. Now, I'm not affiliated with Reef, but this payment plan offers a very manageable way to get into a promising property and benefit from a well-structured, spread-out payment plan. But here's the exciting part. Wim Real Estate, the company that I've previously mentioned in my videos, is working directly with Reef. They can guide you through this process and help you navigate these deals in the best way possible. And if that wasn't enough, Wim Real Estate is offering an exclusive Ramadan deal for my subscribers, and that is 1% cashback on all off plans. So let's make it clear, that's from Wim, and it's applied on all their offers and no developers in specific. Now, let's say you're looking at a property worth 3 million dirhams. That's 30,000 dirhams as cashback. It's a serious deal. To take advantage of that, just text Alex to their WhatsApp and they'll guide you how you can claim it. You can also check their website and Instagram for more details and options. I'll leave down all the details in the description, so please check it out, and let's continue with the next part. Now let's talk about the dark side of the payment plans. Some developers actually include interest rate in those payment plans, they just don't disclose it to the public and you can't simply see it. They inflate the price at the time of the launch, and they are able, by doing so, to offer it to you with just 0% interest. Another case is that you have good payment plans, and linked to the previous point that I mentioned, they might be really appealing and great for you, but the property is simply overpriced. So while I understand you very well that the payment plan might be superb for you. It might not include any interest and it might make you feel that you're losing out. Just do your due diligence and check the surrounding buildings, how much they are selling for, how much they were sold for. All this information is easily accessible through DLD or through DXB Interact, and you can check exactly which transactions have been happening in the exact building. Payment plans became super attractive and popular because previously there was no way to attract a wider audience and specifically international investors, but generally just buyers who previously couldn't benefit of the traditional mortgages or didn't have the upfront costs or funds to pay for that investment. On the shadier side, off plans were a way to attract people who have thousands of crypto savings and might have not been able to justify their funds or simply benefit of a mortgage directly because crypto is not really looked at as fiat by the banks here in the UAE. So the payment plans was an easier way for them to convert the crypto to fiat and benefit of these kind of offers. And I'm not saying this is only applied to the shadier side of crypto. This is also applied to any kind of crypto transaction. It could be that the people just simply didn't have funds and they only hold everything in crypto because of the craziness and madness that's happening in the world, and that was just the best way for them to convert it. But it could also be that those people were involved into some weird transactions and they would hold everything in crypto and they would just simply want to convert it into fiat. Nevertheless, I don't really judge this. I don't really care about this. The point here is that these were the alternative ways that the Dubai market and the developers were attracting a wider audience. Now, we all know that agents also get a higher commission when pushing off plans, which is why some of the projects and their payment plans could not really be sustainable for the investors. Yet, due to the low initial down payment, many people fell into the trap and couldn't sustain their commitments. Different developers have different clauses to enable property resales. If you want to sell before completion, you'll likely face some restrictions, and perhaps even additional fees from the developer. Also, since many try to resell before completion, the market gets super saturated, which makes it very complicated for you to actually do it. Another thing which you have to consider is the market fluctuation, because the market can cool down before the completion of your project, which makes it very difficult for you to actually benefit of some capital appreciation and better rental yields. And finally, many projects face delays. And due to many of these developers missing the completion deadlines, this also means that you're missing some potential rental income if you planned to lease it out, or financial pressure if you plan to resell this property. That's why do your due diligence, check the developer, its past projects, and all the reviews. Do some financial appraisals and speak to trusted market advisors to actually understand what's going on and evaluate whether the opportunity you're considering is actually worth it. Now let's switch over to mortgages and see what challenges you can face with the mortgages. When it comes to traditional mortgages, buyers often face even more challenges and blockers to actually accessing it. One of the biggest hurdles for many is the high interest rates that you have to pay while accessing a mortgage. Although for me personally as an investor, and I believe for many other, this is actually not the biggest blocker, because while the interest is rising, your rental income is also increasing because the rents will also adjust according to the market. But still, this interests can add tens of thousands of dirhams to your property investment, and that can definitely impact your potential returns. On top of that, for me personally, the biggest disadvantage of mortgages is the approval process. Especially in the UAE, it can be very lengthy, bureaucratic, and involve piles of paperwork and lengthy approval processes. This can be super frustrating, especially for those who are willing to make a move quickly. And even when I was looking into mortgages in the past, and I actually do get mortgages, and I do prefer them when I am actually able to get them, I had really, really challenging times to prove everything to the banks, and I actually needed some very quickly, and it was a very, very inconvenient time to be in such a situation. So definitely consider all your backgrounds and make sure you put some months even to your approval process. It's not going to take just 2 weeks. In the UAE, it might take even months. In addition to these challenges, traditional mortgages often come with very fixed payments, which many times make it inflexible and very rigid for you to adjust and adapt to if your financial situation has changed in the past. Finally, traditional mortgages often come with hidden fees and charges that can quickly add up and eat up from your expected income, making the overall cost of the property even higher. Such additional charges could include the property insurance or the life insurance for the mortgage co-owner, because the other owner is the bank besides you, and you have to pay them. This is mandatory. You can't avoid this while you have the mortgage, so this will definitely add up. That's why it's no wonder that so many buyers are looking for alternative solutions. However, let me tell you the bright side of the mortgages, because that definitely persists, and if you are able to access it, it could be the best thing that you could do to your property portfolio. First of all, the biggest advantage of mortgages is that you can access the properties ready-made without waiting for so many years for them to be built and without needing all the cash upfront. This means that you'll be able to make rental income right away that will cover your mortgage payments and will also bring you additional profits. This gives you instant cash flow when you get this property. You don't need to lock up all your capital into one investment, and you also can diversify, because if you're able to get more mortgages, then you would be able to get more properties at a way lower down payment than if you would be taking a payment plan that would demand you to pay really high amounts until the property is completed, and that is usually 3 to 4, 5 years. While the traditional mortgages would split these payments up to 25 or 30 years based on your current age. So it's important to know that if you are, let's say, 50, then the mortgage, the maximum term that you're going to be allowed to take is going to be up to your retirement, which usually is 65 years. So the maximum amount of years would be 15. You can leverage the bank's funds to maximize your property investment and your property ROI, as you will be using the rental income to cover up for your monthly EMI or the monthly mortgage payments. Also, if you got a fixed mortgage, over time your rental income will rise with the trends that we've seen in the past, while your mortgage will stay fixed, at least for the time being that you got this fixed contract. And also, you can change your mortgage. You can change it to a different bank. This is more of a creative way to downgrade your payments and try to lower them, basically, because if you got a fixed term, then you can actually ask for another bank to refinance this mortgage for you and give you a better rate also for a fixed term, so you can actually plan ahead what you are going to rent it out for and what will be your exact income and profits. So while someone else is paying for your rental investment, your property also builds in wealth and appreciates over time, which is another really good thing. Your tenant pays for your principal, your equity grows, and also your property appreciates in value, allowing you to refinance and reinvest your money into newer opportunities. Protecting your cash flow is honestly king, and it will save you liquidity and give you plenty of additional benefits, cover unexpected expenses, and also have the opportunity to explore and invest in newer opportunities. Finally, you can build a better and stronger credit profile for your future investments, which are not really tied to only property. It could be that you get a better personal loan rate or a car finance as successfully managing your mortgage will definitely impact and boost your credit worthiness, making it easier to qualify for bigger loans, better deals in the future, because the banks will prefer a very clean and always paid on time kind of repayment history. In conclusion, both Dubai's off-plans and mortgages offer a range of different cool advantages that if you qualify for, you can benefit and access them easily, but they also come with risks that investors need to carefully evaluate. Whether you choose a mortgage or a payment plan, your decision should be based on your financial tolerance, on your financial goals and strategy. Do your research, check the developer's track record, and consult trusted market experts before making a move. Nevertheless, I hope you liked this video, so please leave a thumbs up. This helps a lot for my channel to grow and make more videos like this for you. Subscribe if you're super generous, and with that, have a great day, and I will see you in the next one.